Let's bring in David Konrad, Managing Director at KBW, a Stifel company. KeyCorp has been one of actually the bottom, the hardest hit bank stock this year besides Comerica, down 35%. Why upgrade now?
I think actually Leslie hit quite a few of those points in the intro. You know, one of the main concerns with KeyCorp is the capital and the impact of AOCI, or the negative bond marks will place on capital. And we feel, you know, for names that are beat up on capital but have lower than peer credit risk, you know, the end of last week, the economic data that we got was a game changer. The increased productivity report we got and the weaker jobs report really put the pressure on off of the higher rates. And so that should allow capital to rebuild more quickly, certainly as these bonds have a better value. But with KeyCorp, it's a little bit more interesting as well because they are materially under earning from some short-term derivatives and short-term bonds that mature over the next 4 quarters. And as those mature, their average yield is under 50 basis points. So our EPS estimate for 1Q24 to 4Q24 goes up over 70% as these bonds reprice.
But we just need bond yields to have topped, I guess, for the call to work. Right?
Well, I think I think that's right for the capital concerns. And so if we enter in a period of stability here, I think the capital concerns will start to ease. The EPS concern, you know, the EPS lift will actually occur just as the runoff of these really low yielding bonds occur.
Right.
You mentioned in the note the discount to JPM. I wonder what you made of Diamond's reported sales of that stock the other day.
Yeah, I think it's a bit of a headwind, but, you know, I think, you know, if you go back to a competitor's conference, I think, you know, Jamie was kind of quoted saying he wouldn't be a buyer of most bank stocks right now. But the reality of this is I think this is a bit of an overhang, but really, I think we have to be fair. He's never sold any stock in his career, and obviously he has some other estate planning issues to deal with towards the end of the reign, I guess.
You cover Citi, so I'm curious what you made of a CNBC report, our Hugh Sun reporting layoffs of at least 10% in some departments as part of this previously announced restructuring program. I talked to Jane Fraser about it a few weeks ago. She wasn't ready to put a number on it, said that'll come toward the 4th quarter. Does this number make sense? Does it make the stock attractive?
I think it definitely helps. I mean, I think part of our concern is really heavy investment cycle in Citi, updating technology. And part of the headwinds here is that they sold a lot of the consumer assets to beef up capital right at the time where Basel III Endgame comes out, which kind of offsets some of that benefit. And so I think that's been a near-term headwind. But I think they talked a lot about bending the curve on expenses. Part of our concern is that just on legacy sales, or is this in the core business? And I think this helps us give more visibility that bending the curve will also be on the core business, not just asset sales.